Good day, everyone. Thank you for joining me. I'm Tamara Kukshinovich, and I'm going to take you through the Mr. Price EIA. On the 26th of November, Mr. Price released his interim results. The highlights were as follows. Diluted headline earnings per share decreased by 24.6%. The group also resumed dividend payments. However, this is at a reduced payout ratio of 63%, which was previously 70.3%. And as a result, dividends per share decreased by 32.5%. Group sales fell by 14.8%, with apparel and home sales down 18.8% and 7.9% respectively. Mr. Price had fewer and lower markdowns through improved inventory management. This resulted in an improved gross profit margin from 40% to 42%. However, this was off a low base. The group also acquired a valued discount retailer called Power Fashion for approximately 1.6 billion rand. In the past, Power Fashion bought excess stock from Mr. Price, which may result in Mr. Price having lower markdowns as poor performing stock can be exited. Additionally, over the last 12 months, Power Fashion's revenue amounted to approximately 17% of Mr. Price's revenue at 1.6 billion rand. Management has guided that the acquisition will be earnings accretive from the start. The group's cash balance rose by 35.1% and amounts to about 15% of its market cap. Mr. Price is gaining exposure to lucrative and high footfall segments by launching 3 new categories, namely Mr. Price Baby, Mr. Price School Gear, and Mr. Price & Company, which includes gifting categories. By doing this, the group is gaining apparel market share and extending its value offering. The market reacted positively to the release of the results. The share price rose by 8.4%, beating expectations. Since our neutral recommendation in July 2020, the share price has outperformed the capped SWIX with a positive return of 19.5%, while the index returned 9.3%. However, it has underperformed the general retailers index. Year to date, the share price underperformed the capped SWIX index with a negative return of 10.7%, while the index had a negative return of 4.6%. On a PE basis, the group is currently trading at an 18.4% discount to its peers and a slight premium of 1.9% to its 5-year average. The premium is justified given the strong brand awareness and the market share growth. With the expected change in the credit landscape, we feel the group is well positioned given its high proportion of sales being cash. That being said, Mr. Price continues to exhibit strong cash generation. The strong set of results have shown a large cash pile, which allows the group optionality, like share buybacks, paying high dividends, or making more acquisitions. Accordingly, Mr. Price has a robust balance sheet, which is imperative given the level of volatility and uncertainty during current events. The group's focus is positioned locally, with Australian, Nigerian, and Polish operations being discontinued. Hence, the group has extended its apparel market share and value offering by acquiring Power Fashion and launching the 3 new categories. To further support our investment case, Mr. Price has resumed paying dividends. Mr. Price remains our preferred clothing retail counter, but we feel the current share price fairly values the group. As a result, we maintain our neutral guidance for the SA equity portfolio. If you would like to place a trade, please speak to your financial advisor or contact the dealing desk. Additionally, the reports on Mr. Price can be found on the PSG online trading platform. Before we end off, please take note of the following disclaimer. Thank you.